And good evening. This is the Elliott wave update for the S&P 500 for Thursday, July 28th, 2022. Fantastic market today. That's all I could say. Fantastic market. It opened lower, reaching session lows within that first few minutes of trade here in the S&P, and then just turned on its heel, as I say, turned on a tick, and just started to climb and climb and climb and did not stop until the after hour of trade at 5 o'clock Eastern, and reached those session highs after Apple and Amazon reported this afternoon, and that high was at 4105. So the S&P was very strong today. And what does that do for our count? Well, as many of you who have been following me for a while know, that I have been running two alternate counts in parallel with each other, side by side. And I have bounced back and forth between the two. So I put it on the chart and I apply it against what's happening at that particular moment. And the reason that I've been doing it and running in parallel, because both remain active, both remain in line to being fulfilled. And as the market changes, leaning towards one or the other, I have switched it back around. Well, today's very strong additional climb pulls back that other alternate count. And that is where this is not a minor third wave. It is the completion point for minor wave 1 of intermediate wave C. And that throws a completely different picture than what the other one was. And so I understand that you're going to probably think wishy-washy, you have no idea, et cetera, but in honesty, it's the market. And if you can tell me that the market knew what it was doing in here, then God bless you. Because there were many periods like, okay, you could just be doing a flat ABC triangle or ABCDE triangle, and that would conclude an additional quick drive down, but not as deep as what could be expected now. So the difference between the two was how high would the bounce get? So this counter trend rally, how high would it get? Because in a minor wave 2, it's going to get much higher than a minor wave 4. So that's what the difference was. And then also on the other side would be, as a minor wave 2, what comes next is that minor third wave, which would promise to be pretty killing from these levels. Be pretty steep, pretty quick, very powerful decline, and would go further than what we were looking for in that minor wave 5. So again, I'm going to keep them running in parallel, because the market, other famous thing for doing right now is just tossing out different scenarios and then different results, like suddenly just doing something totally out of the blue. So both will continue to run parallel until we get down, till we either get to start getting to targets, and then we'll be able to take a look to see which is which. But right now, I am looking at this as if that's just minor wave 1, and we're finishing up minor wave 2. Now, within minor wave 2, first of all, that's also the fibs that I've now put back on. These are the retracements for a second wave. Now, under Elliott, we know that second waves most often find their resistance to complete between the 50 and the 62% retracement levels of that first wave. Well, those sit right here, 41.33, 34, basically. And then we actually have the 200 EMA at 42.21. And then we have the 62%, also common, at 42.51. So basically, let's round it up. 41.34, 42.21, 42.51. So that is where I think the market can get to. Right now, it has plenty of ease and just plenty of room to get to 41.30 to 41.35. In fact, at this rate, if they come in at the same intensity that they now have for 2 days, then and I would anticipate that we're going to get above 41.34, above and closer to 42 up into this zone. And that does not suggest still that this all is reversed and is now the world is bullish. Now, a lot of pundits and a lot of television personalities, whomever, are coming online going, yes, everything's been priced in. It's all looking great. Look what the Fed's coming out. They're really taking care of things. And okay, come on, look at those earnings. Amazon, yeah, they only lost $2 billion, but you know what? They made money. They made money in those web services, which are going to continue to grow, and their sales, which will continue to grow. How would they ever be able to guarantee that, to base the future on the past in the current scenario within the framework of our economy and the global economies? I find it very difficult, but it's extremely typical behavior, characteristics, personality of a second wave. And I've often felt that this is just one big, huge setup, as that sellers, or there's some in positions in some of these stocks that they want those levels to dump. Now, if you participated in the 20-for-1 Amazon, you are jumping up and down. If you're looking that you want to get out of all of this additional stock you now have, you're jumping up and down. You're happy. And maybe getting to levels where you'll start to sell that Amazon. Maybe getting to levels where you'll start to sell that Google. You'll start to sell Microsoft. You'll start to sell Apple. These are levels. And tomorrow, folks, is expiration. So we can do options to make sure that we get out of the stock position. It's going to be fun. So here is what I am going to be looking for moving forward for tomorrow. On the daily chart, you can see the labeling, you can see the fibs, and all the daily moving averages. What we got above are the 200s. What's coming up from below are the 20, the 8, and the 50s are beginning to turn. They haven't quite yet. And again, this is the daily, so it takes a little bit longer to turn this boat. But we got the 50s. The EMA is turning higher. The SMA kind of flat. Same here, kind of flat, but they can see the leveling out. And if this were to continue, it would then turn, but this would have to get above here and keep going. Then they will turn. But right now, well, we still got some upside room. So I'm thinking that for expiration, that it's going to be a coin toss as to what level. Are we going to take it up? We're going to take it down, and to what position things are going to fall in. So there will be a lot of adjustments being made in Apple and Amazon and all of these big Titan stocks that have tons of options that are going to be expiring tomorrow. So as they flip up and down through strike prices, there's going to be plenty to trade. Now, when this is complete, and I'm going to go down to the the hourly, because I want to take a look inside this fifth wave. So again, there's the B wave. 1, 2, 3, 4. 1, 2, 3, 4, 5. I believe so. So we definitely still have upside room. We definitely have room to get to 41.35 or closer to that 4,200 level. Fibonacci wise, we already see we don't have any more fib resistance until 42.50. I think, we've seen some strange pushes that I didn't think they would undertake now, but they did. And they did it in a hurry. And so again, short covering, sure, this covering that, blah, blah. But I'm not going to read forward what the market is trying to tell me and then have everybody say the market's always correct. And it is a premise that I think that we all need to accept, because at that moment, this is the price. So is it correct? Yep, because there it sits. There's the bid, there's the offer, this is the market. Is it correct? Yep, because it's showing it to me. And you can go in and trade on it. That makes the market correct. Is the market always perfect? That's another assumption. I'll take it because at that moment, that is the perfect price, because that was the bid, that was the offer. They got together, they made a match, perfect. So those still remain, but that doesn't mean it'll last. So again, I take also into consideration that we have to really be realistic about, we have a Fed president, the chairman of the Fed, basically telling us that larger interest rate hikes are very likely. Inflation is being stubborn. Inflation is not retreating just yet, but they believe they're getting the upper hand. Whatever the story is, the numbers don't match. Amazon did lose $2 billion, but they made money, and God bless them, because otherwise they would have lost a whole lot more. So to think that one's going to overtake the other is really kind of thinking that everything that contributed to that remains the same, status quo, or improves to keep things bullish. And if that's your belief, well, you're in there buying, and that's okay. But the other side of the story is there hasn't been any physical data that suggests that inflation is slowing. And these numbers happened last quarter during that inflationary period. So if you want to go in there and say, well, look, they did so well. Okay. But next time, if it gets a little bit harder for people to spend the money, are the sales going to go back down? Is ad revenue going to slip again? Are iPhone sales going to go down? Maybe, maybe not. Money becomes more difficult to get into other people's hands. It becomes scarcer during a recession. Repricing takes place. How you're going to really want to spend $1,300 on a phone, on a smartphone? If you're making $250,000, you will. But guess what? During the inflationary period and everything else, guess what? Your cost of housing went up. Your cost of getting around went up. Your cost for food went up. All the prices go up. The sales will start to go down. Seems to be the natural path. In any case, I'm going to continue to hold what I believe to be the path for the market. Again, just a little background. I do not adopt a bullish or bearish posture. I don't have that bias. I don't therefore try to find, is it a bullish report or a bearish report? Is it a bullish earnings report or a bearish earnings report? Should I be interpreting it this way or interpreting it that way? So I'm not rushing out to buy or sell the stock. Or I'm not rushing out to buy or sell the future, but I will trade the future, and I might trade the stocks based on price action. And it's like, if I can buy it here and I can sell it for $2 higher, I'm in. Or if it's going to move $20 higher, I'm in. And you can figure that out by using Fibonacci, by using the moving averages, by using market profile, by using simple supply and demand indicators. Remember, they're searching for value. Value is not suggesting that this is the value. It is the value of the index or the value of the stock, but it's the value area where buyers and sellers can transact business. That's what I mean by value. So when you have a value area, that's an area where the buyers and sellers trade. Volume is created, and that then creates your points of control, where buyers and sellers take control. And if it moves above the point of control, well, then you're heading to the value area high. And if it keeps going, there's nothing more than suggests that the demand for the underlying, for the future, for the stock is greater. The buy demand is greater than the sell supply. So it gets moved to the next value area where they can transact. And now, if you want to attach a bullish statement to that or a bearish statement to that or whatever you want to test with, that's fine. But again, by the time you're trying to figure out how long will this last, you've just let a whole lot of money go by. A whole lot of money go by. So that's actually my point. Trading supply and demand, trading the number, trading the price action, gets you into all of this money flipping back and forth. It's just like you're walking around. If you're standing in the eye of the storm, people, and what's whirling around you are dollars. It's a storm, but they're dollars. And what's that storm being created by? Well, everybody's got to turn bullish. They got to cover their shorts. Everything's going on. So a lot of orders and a lot of money is being tossed from one to one. And all you're doing is stepping in, taking some, giving some, taking some, giving some. And hopefully by the end, you have taken in more than you've given back. So that's what I do. I trade. And that is why I am grateful for these moves. So yes, I'm still surprised, going like, wow. And in the face of everything's happening to the economy and the globe, I'm surprised that this much money is being pushed into equities. Future is not all decided. And the markets and all of these companies will not get past, the reality. So I'm just going to trade it every day as it's presented to me and not care if it goes up or down. But these up moves have been pretty dang good. And I'll tell you what, when the volatility increases, so are the down moves. And if you're a day trader, you can catch them both. And you can have really great days. And then my other point is, folks, this is not going to last forever. The market will get slow again, where it will take forever to get from point A to point B, where there won't be a lot of volume, where there won't be that much money being flipped around, where it'll feel very choppy and you can't get in or out and make money because it's just moving and chipping and chopping. So I prefer to go in and try to make the best out of what's happening right now. And it's an up move. And I don't think it lasts forever. And I do believe what comes next is a dose of reality. And unfortunately, that reality will be interpreted as a bearish move because the market will go down. So it will be considered negative. But I'll tell you what's even more negative is inflation and higher interest rates. That's the negative, because that affects way more than whether Apple goes up or down or Amazon goes up or down. It affects a much wider swatch of the population. In fact, it affects all of us. So for tomorrow, it's expiration. Be on your toes. We should have a lot of volatility and a lot of moving around between strike prices. So, get it. If you're going to watch a stock, figure it out. Go look and see what's trading and see where all of these lines are going to be drawn. Now, if downside should start to kick in, and I don't think necessarily that it's going to happen tomorrow, but stranger things, I really would expect the number to be, or the change or the reversal to be exactly that, a quick and sudden reversal. And most of the time, that's really going to be driven by news. Something in the news just presents itself as a shock to the market, and then we turn and we start to go down. Now, if we're looking at just on the 4-hour chart, we need to start coming down and start breaking the 8. We break the 20. We break the 50s. We break the 200. We break both. We start breaking down through support. Again, we're up about 4,100. We're going to see 3,700 pretty quickly. And so it could feel very crash-like. We're going to just play it out. We're going to see. I think that we'll get plenty of this. Okay. Here we are. Last time we were at 4,100. That was back in June. And we went from 41.45 down to 36.39, the low. Well, this time we ain't going to stop. Now we're going to go all the way back down and we'll break 36.39. And you can see how many days it took to get there. So don't think that this market cannot do it, because here we just did it in June. And all this is basically just a recovery rally from something a little bit bigger than that. So again, putting things into perspective, you're going to see the possibilities. You're going to see what could take place. All right, I'm leaving it all there. Have a great trading day tomorrow. Be careful about trading chop. Think also that the market could turn very quiet to allow all these things to expire where the bigger players want them to expire, where everything changes hands. And we'll see. Check out Zero Hedge. They normally will have There is somebody who posts and they'll let you know what the expected number, the dollar value to tomorrow's expiration. Sometimes we get it, sometimes we don't. All right, our next update will be on Sunday, the 31st of July.